Endeavour, the company that owns the UFC, has gone public in the last week and you can now add them to your investment portfolio. But will investing in Endeavour lead to that red panty night, or will you and your investment get knocked out?
Baby, we done it. We're rich, baby. Conor McGregor made us rich. Break out the red panties.
That's what I want to take a look at today. I'm going to give you a bit of a background on the company and how Endeavour actually makes their money, which is not just from the UFC alone. We'll also take a look at their recent financial performance and take a look at how the stock price has performed since they have gone public. I want to keep this video short and to the point, so let's get straight to it. Endeavour is a high-profile entertainment, sports and content firm. As I was saying, they hold a major stake in the UFC, but this is not the only asset that they own. Several other assets that they have are the likes of the Miss Universe contest, the Euro Basketball League, the Professional Bull Riders Organisation and the Miami Tennis Open. And this side of their business, I believe, accounts for about 30 to 35% of their total revenue. Another big part of their business is talent management. So they manage the likes of Oprah, The Rock, Serena Williams, Matthew McConaughey and Mark Wahlberg. They also have another side to their business which is to do with online streaming. So they definitely do have their fingers in a lot of different pies. The CEO of the company is Hollywood mogul Ari Emanuel, and he is thought to be the inspiration for the character Ari Gold in Entourage. Entourage! He has made his name primarily through talent management. There has also been an interesting addition to the board of directors lately. The Doge father, Elon Musk, has been added to the board. Although he will have very little to do with the day-to-day running of the company, his presence will definitely bring a lot of attention and hype to the company. So that was a very brief overview of the company. Now let's have a look at its recent financials to see how they're actually doing. In 2019, the company brought in revenue of 4.57 billion, but this took a massive hit in 2020 due to COVID. As a result of COVID, their revenue was down to 3.48 billion, which is a decrease of 24%. There has been a lot of commentary saying this is pretty poor performance, but in my own personal opinion, I think they did pretty well considering that a lot of the revenue comes from live events. In fairness to Dana White last year, the UFC was one of the first organisations to figure out how to get live sports back on their screens when COVID was in full swing. And they recently held an event in March with 15,000 people actually attending. So this is a good sign of things to come. Hopefully the UFC will be able to get more and more people attending live events throughout the later part of this year. So the company is in a loss-making position. So they made a loss of 654 million in 2020 compared to a loss of 554 million in 2019. So this has led a lot of investors to believe that the company is significantly overvalued compared to its current valuation of about 10 billion since its IPO. So what do Endeavour actually plan on doing with the money that they have raised from this IPO? The majority of the money, 836 million, is going to be going towards buying the remaining part of the UFC that they actually don't own. And the remaining 900 million or so is going to go towards other investments and assets. One thing to be wary about on the company's financials is that they have 6.4 billion in debt on their balance sheet at the end of 2020. This is going to put a significant strain on the company's ability to make a profit in the next few years until they actually get this debt situation under control. Now let's have a look at the stock price and see how it's performed since the company was listed. So the offering price for the IPO was around $23, but when it actually hit the market it was trading at about $30, but it dropped quickly soon after back down to the 23 mark, but since has been climbing back up and is now sitting at about $29.84 when I'm making this video. So it's nearly back up to that $30 mark. So what do you think? Is this company worth buying stock in? Let me know your thoughts in the comment section. The company itself is pushing itself as a reopening play, and that is going to have serious growth when the economies reopen. And they will also be getting into selling NFTs, non-fungible tokens, in June, which we have seen lately with the NBA and the NFL. So that could be another significant revenue stream for them. I myself am still not convinced, but it's definitely a stock that I will keep an eye on in the short term to see how the price settles over the next 3 months. But this is not financial advice, so make sure and do your own research on it and see what you think yourself. So thanks very much for watching, everybody. I hope you enjoyed the video, and if you did, make sure to like the video and subscribe to my channel for more videos like this.